Most traders stare at the lower time frame waiting for clarity. But clarity doesn't come from zooming in, it comes from zooming out. Because the entire market structure, liquidity, and direction you need is already inside one weekly candle. Let me show you how to trade the week using one candle, one bias, and the same repeatable 3-step process. Every week forms the same framework: a high that holds liquidity, a low that holds liquidity, a sweep of one side, a displacement back inside, and an expansion towards the opposite side. This happens over and over because the weekly candle is the market's blueprint. It reveals bias, liquidity, direction, and then target. The lower time frames only show noise. The weekly shows the intention. Now let's turn this into a simple 3-step strategy. Step number 1, mark last week's high and low. This is the entire map. Just 2 levels, last week's high and last week's low. These act like magnets for liquidity. Your job is not to predict, your job is simply to see. Which side does the market take first? Because whichever side is swept first sets the direction for the rest of the week. Sweep high, bias down. Sweep the low, bias up. Simple, objective, and repeatable. Step number 2, wait for the sweep, the failure to displace back into the weekly range. This is the key. You don't trade the sweep, you wait for failure of the sweep, meaning price tags last week's high or low, fails to continue, then displaces strongly back inside the weekly range. This displacement is the tell. It confirms liquidity has been taken. Price is reversing. The weekly expansion is beginning. This is where 90% of the profitability comes from. Step number 3, enter on the CISD break or the fair value gap inversion. Once displacement is confirmed, look for an entry refinement on the lower time frame, either the 5-minute, the 15-minute, or the 1 hour. You enter using the CISD, which is the change in state of delivery, or a fair value gap inversion. This gives you precise entries, high confidence setups, and a clean narrative from the weekly to the lower time frames. Stop loss goes just above or below the sweep zone, and your profits can be a 1-to-1 consistency, or you can target the untouched opposite side of the weekly candle. That is the full system. This works because the weekly candle is where liquidity is collected. It is where smart money builds positions, is where the algorithm sets the direction. It is where expansion moves originate. By following the weekly structure and entering with the CISD, you're trading with the actual weekly intention, not fighting it. This is why the strategy feels smooth and clean, because you're aligned with the real flow of the market. Now let's jump onto the charts and let me show you exactly how this works. Here I am on the charts on the weekly time frame. Keep in mind this strategy can work with any trading asset. So the first basis is we want to mark out our weekly levels. As you can see over here, I'm on the weekly time frame. All you're going to do is you're going to mark out the weekly highs and the weekly lows. Can you see the weekly highs and the weekly lows? These weekly highs and weekly lows form a range. So you can see over here, I'll mark this weekly high and low out. I'm going to take this whole bunch over here. So now it's basically showing us all the weekly highs and lows in this little patch. So why have I taken this little patch? If I zoom out on the weekly time frame, you can see over here that we've had an expansive move take place. Look at this massive displacement to the downside. Now it's finding some kind of base. Also, if we look over to the left, you'll see this is a key level that we mark out. You always want to mark out key levels because when price comes to higher time frame key levels, that is where we usually get these reactions that take place. So you can see this is a swing low, which is a liquidity area. Price tapped into this liquidity. It has not broken below that area. And you can see it's finding resistance on these weekly candles. So we know this is a high probability area where price is going to reverse off of this key level. So now that we mark out this higher time frame key level, we can zoom in and look at these weekly levels. So now I've dropped down to the 1 hour time frame, and you can see I've marked all these weekly highs and these weekly lows out. So the market only really moves in 3 different ways. It does continuations, reversals, or it finds indecision. So right now you can see price is ranging between these weekly highs and lows, which act as strong liquidity levels. Every time price comes to a weekly low, you can see we get a reaction over here, and over here we get a reaction. And every time we get next to the weekly high, we get a reaction and we get a reaction. So it's very clear to see that whenever price is coming to the weekly high, we get reaction points, the weekly low reaction points. These are liquidity levels, and these are high probability zones that we want to look to take entries and trades off of. So the first step is to mark out these levels on your chart. Once you've marked them out on your chart, you simply have to wait for price to come to these levels. When price comes to these levels, you're going to simply observe to see how price reacts off of these levels. And then based on how price reacts off of it, you're going to determine your entry sequence, which I'm going to go into some details with you now. Keep in mind, this strategy you can enter on the 1 hour, the 15 minute, or the 5 minute. It is totally up to you. But the key feature we want to notice is when price comes to our key level, we want to see a sweep taking place. In this example, we did not get a sweep. We saw price just touched our weekly level and then found resistance. And there's still ways that we can enter based on this, which I will show you now. To keep this simple, I'm going to use the 1 hour time frame for my entry. So if we move this a little bit further in time, you will see this was our key level where we're looking for some kind of reaction. Now what I do is, once price gets to a key level, if you don't see a failure to displace happening or a sweep happening, I mark out the CISD level or an opposing level. You can see over here, I mark out this level, and you can see price breaks this opposing level. It also leaves behind a fair value gap. So right now, price is tapped into our key level. We're getting a break of structure happening. Price is leaving behind a fair value gap. So this is giving us a sign of a weakness occurring. So what we could do, there's two different ways we could enter. You can simply enter a short position on the break and closure of this opposing level. Stop loss goes above the swing high. That is one area we can enter. The second area we can look for an entry is if price comes and taps into this fair value gap and stop loss above the previous swing high. For targets, we can either target the lower liquidity of this current structural point over here, or you can target the weekly lows, because price typically likes to take out the highs of the week and then come down and take out the lows of the week. This doesn't always happen because price loves to take out liquidity at the highs and lows of these higher time frame candles. This is the setup I would have taken, which is still a massive trade. So now let's let it play out. You can see we could have entered one position or even two positions. There we go. There we go. There you go. Profit hits. There we go. Target hits. So you can see what happened over here. Price broke the CISD, which was showing weakness. Then it retraced back into the fair value gap over here. Then it broke down even further, retraced back into that fair value gap. And then we got the massive drop and then the drop again. For our next entry, want to wait for price to come back to the weekly lows. There we go. Price is just broken below the weekly lows. Now we want to just wait for some structure to develop. So we can see price broke below these weekly lows and it's forming the sweep formation. But we want to see price come back into the range for confirmation. We can also mark out our opposing level. So at this point, we want to see price at least get above the opposing level and get back into this weekly range to look for an entry. So we just wait. There we go. So we get a nice break above the opposing level. And this is a confirmed entry. Just breaking the opposing level is a strong sign that price is in fact reversing, since we got this whole failure to displace sequence playing out below here. So we can look for our long entry on the closure of that candle. Stop loss goes below the swing low. And then we can target the highs of this range. We can either target these opposing levels, or we can also target these fair value gaps. What we're doing is, since we found our entry, we're looking for draws on liquidity, which are potential magnet areas, which is going to pull price towards these areas after we look for an entry. This is a very good setup. You could also look to target the highs of the week as well. It all depends on how you like to trade and how long you like to hold your trades. So let's play this out. Oh, that just took off straight away. Hit our profit. There we go. Fantastic. Trade done. So you can see if we keep going, price tapped into our take profit area and then it just kind of shot all the way to the weekly high. So there we go. So now let's move on to our next trade. Price is tapped into the weekly high again. And you can see we've got some nice wicks over here. So what we want to actually do is we want to look for a break of structure. This is our CISD level right over here. And when price breaks this level, it's a strong confirmation that it's coming back into the range because we get that failure to displace. And there you have it. So price has just broken this structural point. And then we're going to look for an entry at the candle closure under the CISD. Stop loss goes above the manipulation, the swing high points. And once again, we can target the low of the range. We can target all the way down to the weekly lows. Keep in mind, if we look next to us to the right, we can see we've got all this displacement. Look at all these fair value gaps. And price often likes to take out fair value gaps on the opposing side. So I think this could be a nice setup. So let us bit longer, but it just shows you how price loves to travel from liquidity to liquidity. Now we can see price has tapped into the weekly low again. So now we're looking for another setup. We don't simply enter right now. We want to wait for confirmation. So you can see confirmation, price back into the range. We get a failure to displace pattern happening. For us to have strong confirmation, we want to see price break this opposing level, or we want to see price break through this fair value gap. So those are the two different entries we can use. On the break and close of that candle, we can enter, we can set our stop loss above the lows because this is our manipulation point. If this is in fact a true manipulation, price will not reverse past that level. And then our targets we can set at the high of this weekly range. And let us play this out. Also price came down. All right, so this is where we currently are. I'm currently in this trade actually. So let us see how it plays out. The target is going to be the highs of the weekly range. You can see we've got two weekly levels here. Either the first or the second is going to be our potential area to look to take profit, and then potentially to look for another entry at these levels. Remember, the key to using this strategy is simple. Either price is going to come to these levels, we're going to get a failure to displace or reaction off it, and that's going to let us know we're going to look for a reversal entry. Otherwise, what can happen is if price breaks through these levels and finds support at the top, it invalidates that setup. So there's two things you're going to look for. You're either going to look for a reversal pattern forming, or there's going to be a continuation, which is a break above that level and then consolidation. You only want to look for entries using this strategy if you can see price is causing failure to displace or a sweep pattern forming at this level. Once we get the sweep forming, we want to mark out the CISD. As soon as price breaks the CISD, that is going to be our sign to look for our entry because that confirms the sweep. The break of the CISD confirms the sweep is real. So just keep in mind there's some important little aspects that you really want to focus on in executing this strategy with success. To make